Hey everyone, welcome back to the channel. Today, we're diving deep into one of the hottest names in tech, NVIDIA Corporation, ticker NVDA. If you've been following the markets, you know this company has been a powerhouse, especially with the AI boom. So let's break it all down, financials, performance, valuation, and more, to see if this stock still has room to run or if it's time to take a breather. Stick around. And don't forget to hit that like button and subscribe for more in-depth stock analyses like this one. All right, let's set the stage. NVIDIA isn't just a chip maker anymore. It's at the heart of some of the most transformative tech trends today. From AI to gaming to autonomous vehicles, they've got their fingers in a lot of pies. I've been digging into their latest numbers and news, and there's a lot to unpack. Whether you're already invested or just curious, we're going to look at what's driving this company and whether the hype matches the reality. Let's get into it. So, for those who might not be fully up to speed, NVIDIA Corporation, headquartered in Santa Clara, California, has been around since 1993. They're a leader in graphics, computing, and networking solutions. Think GPUs for gaming, data center chips for AI workloads, and tech for self-driving cars. Led by CEO Jensen Huang, they've got about 36,000 employees worldwide and operate across key markets like the US, Taiwan, and China. Their mission? To power the future of computing, especially in areas like artificial intelligence and machine learning. With a market cap over $4.3 trillion as of recent data, they're a giant in the tech sector, specifically in the semiconductor industry. That's the quick snapshot. Now let's dive into the numbers that matter. Let's talk revenue, because NVIDIA's growth here is nothing short of staggering. For fiscal year 2025, they reported total revenue of $130.5 billion, a massive jump from $60.9 billion in 2024 and just $26.9 billion in 2023. Breaking it down by segment for 2025, data center is the absolute beast, bringing in $150.2 billion. Think AI chips powering cloud computing and hyperscalers. Gaming, their historical bread and butter, contributed $11.3 billion, while professional visualization and automotive added $1.9 billion and $1.7 billion, respectively. Geographically, the U.S. led with $61.3 billion, followed by Singapore at $23.7 billion, and Taiwan at $20.6 billion. China's still a big player at $17.1 billion, though we'll touch on some geopolitical headwinds later. This kind of revenue explosion, especially in data center, shows how NVIDIA is capitalizing on the AI megatrend. The question is, can they sustain this momentum? Let's keep digging. Moving on to earnings, NVIDIA's performance has been just as impressive. In fiscal 2026, they posted a net income of $120.1 billion on revenue of $215.9 billion, translating to an EPS of $4.93. Compare that to 2025, where net income was $72.9 billion, with an EPS of $2.97, and 2024 at $29.8 billion with an EPS of $1.21. The profit margins are eye-popping too. Net profit margin for 2026 sits at a hefty 55.6%. Operating income for 2026 came in at $130.4 billion, showing they're not just growing revenue, but also keeping costs in check relative to their scale. These numbers scream efficiency and demand for their products, especially as AI infrastructure spending continues to soar. It's clear NVIDIA is firing on all cylinders, but let's see how this ties into their broader financial health. Now let's take a closer look at some insights from their most recent earnings call for Q3 2026. Revenue for the quarter hit $57 billion, driven heavily by data center demand as AI adoption accelerates. Management highlighted their leadership in AI infrastructure, noting that their chips are essentially the backbone of modern computing for hyperscalers and enterprises alike. They also pointed to strong growth in automotive, with partnerships expanding for autonomous vehicle tech. On the flip side, they acknowledged some challenges, like geopolitical tensions affecting certain markets and supply chain constraints that could impact delivery timelines. Still, the tone was overwhelmingly optimistic about the long-term outlook for AI and NVIDIA's role in it. This aligns with the financials we just discussed. Massive growth with some hurdles to navigate. All right, let's pop the hood on NVIDIA's financial statements for a deeper look. Starting with the balance sheet for fiscal 2026, they're sitting on $10.6 billion in cash and equivalents, with total assets of $206.8 billion and total liabilities at $49.5 billion. That gives them a rock-solid equity position of $157.3 billion, up significantly from $79.3 billion in 2025. Their current ratio is a healthy 3.9, showing they've got plenty of liquidity to cover short-term obligations. Looking at cash flow, operating cash flow for 2026 was a whopping $102.7 billion, with free cash flow at $96.7 billion after accounting for $6 billion in capital expenditures. Return on equity is over 104%, and return on invested capital is 62.9%, numbers that show they're generating incredible value from every dollar invested. Debt to equity is super low at 0.07, so they're not over-leveraged. These metrics paint a picture of a financially sound company with the firepower to keep investing in growth. Now let's tackle valuation, because with a stock like NVIDIA, the big question is always, is it overpriced? At a current price of about $177.82, their trailing PE ratio is around 35.9, which isn't cheap, but isn't outrageous given their growth. Price to sales is high at 19.9, reflecting the premium investors are paying for future potential. Looking at forward PE estimates for 2027, analysts are pegging it around 22 to 28, suggesting the stock could become more reasonably valued if earnings keep pace. Enterprise value is $4.3 trillion, massive but tied to their dominant market position. Compared to the semiconductor industry average PE of about 146, NVIDIA looks relatively attractive, though that industry figure is skewed by smaller players. My take? The valuation is stretched, but their growth trajectory in AI could justify it if they keep delivering. Still, any hiccup could trigger volatility, so caution is warranted. Let's break down NVIDIA through a SWOT analysis to get a clearer picture of where they stand. Starting with strengths, their record revenue growth, $215.9 billion in 2026, shows their dominance, especially in data center and AI chips. They've got a strong brand and ecosystem that locks in customers. Weaknesses, geopolitical risks, especially with exposure to China, and supply chain bottlenecks could slow them down. Opportunities are massive. AI infrastructure spending isn't slowing anytime soon, and sectors like automotive are just getting started. Threats include competition from AMD and Intel, plus regulatory scrutiny over export controls. Overall, NVIDIA's strengths and opportunities outweigh the risks, but those external pressures are worth watching. Let's check out NVIDIA's recent performance on the charts. Over the past week, the stock is up 1.25%, and over the last month, it's gained 6.6%. Zoom out to a year, and we're looking at a 35.5% increase, while the 5-year return is an insane 800%. That's the kind of growth that turns heads. Compared to the broader technology sector, which is up just 9.9% over the past year, NVIDIA is crushing it. Short-term, the stock seems to be in a consolidation phase after its parabolic run, hovering around $177. If we see a break above key resistance near 180s, it could signal another leg up. But with high volatility, beta at 2.38, expect some choppiness. Long-term, the trend is undeniably bullish, but near-term moves depend on broader market sentiment and AI hype cycles. Now let's dive into an intrinsic value analysis to see what NVIDIA might really be worth. Using a discounted cash flow model, I've factored in their projected free cash flows, $96. $7 billion in 2026 is a great starting point, along with a conservative growth rate of 15% for the next few years, tapering down to a terminal rate of 3%. I've applied a discount rate of 8% to account for market risk and their high beta. After running the numbers, the intrinsic value comes out around $210 per share, suggesting NVIDIA is currently undervalued at $177.82. That's a potential upside of about 18%, which is enticing. Of course, this assumes they maintain their growth trajectory and navigate geopolitical risks. If those assumptions falter, the value could adjust downward. Still, based on today's data, there's a case for upside potential here.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator. built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances. Discover the most active stocks and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.